You've got a neutral position, though, on Australia. What's behind that?
Yeah, so for much of the past couple of years, we've been constructive on Australia. To be honest with you, it's one of the best places in the world to find dividend yield, especially compared to our own home markets in the United States. There's a huge dividend yield, sort of arbitrage there. But more recently, we've become a little concerned. Maybe concerned's too strong a word, but at least we're more highly sensitive to the fact that housing prices in Australia appear to be cooling somewhat, which is obviously really important for the big four banks there, which dominate the MSCI index that we invest in. And so, it's one of those things where, the housing market in Australia has been something that people have been talking about, it seems like, for a decade, right? When is this bubble going to burst? And it never bursts. And we don't think that's necessarily imminent, but we do think there's some kind of worrying signs there. So we've moved back to a little bit more neutral positioning. And particularly from a value perspective, we see better value in some other international markets.
Okay, we'll get to those in a moment, but just I was explaining the Australian market at this 10-year high. The lower Australian dollar are seeing more inflows from foreign investors just over the last few days, despite all of these concerns over the trade situation. Also, Aussie companies that do a fair bit of business overseas and remit in US dollars benefiting from that slide. Are those companies that you would consider looking at, things like some of the biotech companies listed in Australia?
Well, to be honest with you, our shop is global macro, so we look at, we tend to look at top-down things. We look at countries from a country perspective versus more of a bottoms-up focus. But yeah, I think you're right that generally speaking, companies that would benefit from the weak Aussie dollar are a little more advantaged here. And the slide in the Aussie dollar, at least relative to the US dollar, may not stop here because, there's a strong correlation between that and commodities prices, which are on a little bit of a slide. And also, it's very global growth and China sensitive. And, we see some cooling of the Chinese economic growth as well.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.